Good morning to everyone. Welcome to our Digital Age panel. It's a great pleasure to welcome you in a very sunny Brussels. Today is a bit a special day because, first of all, it's the first week with the sunny weather in Brussels of the year. But also this is a special day because measures have been relieved here in Brussels. We can go out for a beer till 11:30 in the night. We can go for a restaurant. We can watch the match tonight and having a bit more relaxed and normal social life. So this is a note of optimism. Our life is coming back. And of course, we have to deal with the new challenges as ECBC and position our industry always in a strategic place to understand what's going on around us, what is changing, and what can be improved. The ECBC and the EMF is fully committed to make sure that this industry will always position in the right place and is debate about the right topic. And we cannot afford not to discuss about the digital agenda. The digital agenda is changing our life. We are all working from home. Probably very few of us have more than 20 euros in their wallet. And we are all changing our behavior as consumer, as lenders, as investors. And I'm very delighted that today a few friends, few colleagues have accepted the challenge to discuss together with us and to give their perspective. Because we need to understand what's going on from the investor perspective, from the issuers perspective, rating agencies. All of us, we need to enrich and get the right knowledge, the right language. Together with Antonio, I had the privilege to follow the instruction of Antonio of in introducing the ECBC, this idea of discussing about the digital age and follow the digital agenda of the European Commission. We wanted to open this symposium with an approach that I will call a Socratic approach. We know that we don't know, and we need to share your ideas together. And of course, what these words put in the mouth of Socrates from Plato were just the beginning of this thirst of looking for knowledge. The humankind has to follow the light of the knowledge and try to understand and having a better understanding to fight against the darkness of the ignorance. That's the only way to move out the humankind from slavery and increase the capacity of the humankind to adapt to the new environment. And we are getting in a new environment as an industry, as consumer, and as citizens. So we need to understand what's going on around us. But what's going on? Well, I will not start from Brussels, but let's start from far away from Brussels. A few days ago, on Wednesday, El Salvador has officially accepted as Bitcoin as official currency for their country. This is just an initial step, but is a formal wake-up call for all of us that something important is happening around us. Yesterday, the European Central Bank has decided to look very carefully of the project of the digital euro, but taking a bit of more time to consider very attentively what are the consequences of this project from a geopolitical point of view, but also from a market point of view, from a monetary basis, and all the consequences. So we wanted to start this debate in the industry because we need to go back to the steering committee and we need to decide together with the ECBC steering committee, but also the EMF executive committee, how to position the mortgage and the covered bond industry in this debate. What are the challenges in the policy agenda of the European Commission? We have seen that last year in December, the Commission adopted the Digital Service Act package. This will change the way on how consumers will use digitalization on their daily life. What the Commission is trying to build is really a digital single market based on three major principles. The first one is securing access to consumer businesses to digital products and services. The second principle of this is creating the precondition to allow digital networks to be developed in the Union. And the third is create the potential for a real digital economic growth. So those are the strategic lines that the Commission is following. On top of this, the digital aspect is the real pillar of the Green Deal. Sustainability should be looked around digitalization. And I'm sure that all of us, we think that we are expert, but we are not. We should know that we don't know, as Socrates was saying. We can know better listening to all of us and getting a better knowledge. We don't know what protocol will be the right protocol for the coming months. We don't know what technological solution will be the right one. We know only that our industry is changing because if we think geospatial data are changing the property valuation industry, this will have a consequence on our prudential framework. Our consumer, as I said, will be buying or looking for mortgages in a different way. And banks are doing transactions in a different way. Investors are looking for different information. We cannot have a wait and see approach. We can simply not afford this. We have to go around Europe, the world, listen everyone, and very carefully digest this information. We are starting this process of listening everyone, because in September, we will go back to our board and we will discuss this. Most probably, we will decide to have a complete new action plan on the digital agenda. We are listening to you very carefully, so we invite you to take the floor. And I would like to thank all our friends and colleagues that today have accepted the challenge to be part of this symposium. But especially a special thank you to you, Antonio. I'll let you introduce our speakers, our friends, allow me to say. But a special thank you to you for guiding us in this new adventure. And thank you all for participating this morning in this very important debate, which is just opening a new avenue for the ECBC and the EMF. Thank you all. Antonio, the floor is yours.
Luca, can you hear me well? Okay.
Yes.
Luca, thank you very much for your introduction. Thank you everyone for participating today. Brief introduction to myself. I am former head of funding for Banco Santander, and I am very pleased to collaborate with Luca and the ECBC. As you know me, I was chairman of the ECBC a few years ago. I have been participating very actively both in the steering committee and some working groups. So I have been very involved for many years in the ECBC activities, and for me it's a pleasure to help the steering committee and Luca to steer the conversation, as after all I am just a catalyst of this type of thinking, and certainly I hope that I can contribute to increasing the industry knowledge and the industry debate around these topics, which, as Luca said, I believe will be transformational for the industry. Okay. Having said that, we have a very interesting and an excellent panel with us today. Evidently, it doesn't include every constituency, but look, the ECBC at the end of the day is an issuer, fundamentally highly populated with issuers. More than actually 60% of the ECBC members are issuers or associations, and therefore what is happening in the issuance world is important. Okay. Without further ado, let me introduce the panel very briefly, because we have a very diverse panel which would help us in the discussion. Number one, we have with us today Jean-Marc Stenger, CEO of Société Générale Forge. Jean-Marc joined Société Générale in 2000 as an analyst based in Frankfurt. He started with 30 other 5 employees, Lixor Asset Management, a specialized asset management company in the equity derivatives division of the bank. He became head of portfolio management in 2005 and CEO and member of the executive committee in 2013. When Jean-Marc left Lixor, they had 600 employees and nearly 137 billion of assets under management. And he left to put together Forge in order to expand Société's capabilities in the digital capital markets. So he is the digital expert in our panel. Additionally, we have Christoph Hock. Christoph Hock is today the head of multi-asset trading at Union Invest, a large major investor in the European market and in Germany. Christoph has been with the company since 2014, and previously to that, he has held senior sales and trading positions in entities like Alpha, Barclays Bank, Tungsten, Ferox, JP Morgan Securities, and Dresdner Kleinworth Benson. Also in our panel from the rating agency world, we have Carmen Muñoz. Carmen, a senior director of Fitch Ratings Structure and Finance and Cover Bond Enhanced Analytics team. She is focusing on research, criteria development, and special projects related to cover bonds, ESG, and fintechs. Carmen has extensive experience in the cover bond world and in the rating world, and she can give us her views on what is happening from her side. Before joining that team, Carmen used to be country director and responsible for the rating of Spanish banks. Additionally, we have Fritz Luithlen. Fritz is currently the head of capital markets, debt capital markets at DZ Bank, having held many of these important positions in the bond side of DZ. He was head of covered bonds, head of MTNs with the same institution. So he definitely is a capital markets specialist in the panel. And finally, Boudewijn Dierick. He is the ECB chairman. I have known Boudewijn for many years. He is currently the managing director of country head of Auxmoney, which is a digital consumer marketplace. He joined BNP Paribas, where he used to be head of ABS markets and in the securitized asset products group. So he is as well an expert in the structuring and putting together of secure transactions. Previously, he held senior analyst positions in the securitization field in UBS, Moody's, and ING. So we have a really diverse panel here. Without further introductions, we would like to get into the subject of digitalization. Evidently, digitalization is a very broad aspect. I think probably in terms of headlines for our market, probably one of the key headlines that we have been seeing in the last few months has been the issuance of securities, digital securities. And out of the different efforts that we have seen in this market, definitely one of the most visible ones has been Jean-Marc Forge's recent transaction with the EIB, and also Société Générale's experience in the issuance of digital cover bonds not so long ago. I think it was last year. So in order to get the ball rolling and to start the discussion, I would like to ask Jean-Marc, number one, to tell us a little bit about the recent transactions, to tell us in general what they have been, what the facts about what they have done, and also to maybe expand a little bit on that and maybe tell us what the benefits of these transactions, the perceived benefits for the issuers, for the underwriting and placement banks, and for the investors are of these transactions. Jean-Marc, could you please tell us a little bit about these deals and how you view them from a practical point of view as the benefits of that?
Yes, sure, Antonio, and good morning to everyone. Very happy to be with all of you this morning and to share these thoughts and discussion on a new digital age for capital markets. Maybe before jumping in the transaction, maybe just by way of background, because I think it echoes very well the introduction you both made. Maybe on the way we approached digital assets and digital securities at Société Générale. Actually, it's already a few years, like in many banks, that we were exploring notably blockchain technology as a way to speed up basically our operations, but also as a way to provide our clients, meaning issuers or investors, with enhanced capabilities and better services and better financial terms using the benefit of that technology blockchain, which we think has really the capacity to fundamentally transform the way capital market do operate. And I think we were lucky at Société Générale that for probably 3 or 4 years, the top management of the bank really at the CEO level gained that condition that it's not just a marginal technical evolution we are facing with blockchain, but truly a profound transformation which is underway on capital markets, changing the way clients will interact, changing the way banks will service those clients, and also the quality of the service, and I'll come back on this obviously in a few seconds. We have seen, we have witnessed this in the field of cryptocurrencies, which is somehow a different topic, and also to make it clear, at Société Générale and notably at Société Générale Forge, we do not provide cryptocurrencies services. We use this technology, blockchain, to provide better services in the fields in which we operate capital market to our clients. But we have seen those developments in the cryptocurrency space. You mentioned Bitcoin and Salvador. There are other developments which have been seen in the market, but I think it's clear for everyone that something is happening there. And the fact that also a few years ago, and I can come back on this as well, we have seen central banks and notably G7 central banks entering into this field to explore the benefit of blockchain technology for what we call CBDCs, central bank digital currencies, meaning the ability to provide us, basically, users of currencies with a new form of currency, which will flow very easily, very cheaply, very quickly on a global network, which is a blockchain, is obviously a very strong accelerator of this change. When we started SG Forge 3 years ago, basically, we thought that this transformation will be for, let's say, the next 10, 15 years, will come in 10, 15 years. Actually, we have seen a very strong acceleration of that pace, a shortening of the time window, and which also pushed us to create, to incorporate this new subsidiary, Société Générale Forge, a year ago, which is a regulated entity now in France, providing digital capital market services to our clients, basically in 3 fields: structuring financial instruments, covered bond, that's the first one we did, bonds, unsecured bond, and no structured product in the format of security tokens, meaning securities which are natively deployed on a blockchain network, which do exist in a digital form in this network, and which do not flow at any point in time in a traditional market infrastructure, do not flow through a CSD, and are a pure digital form of this security, achieving exactly the same rights and benefits, being pari passu from a legal perspective with any other security, both for the issuer and the investors. So that's the first service we provide. Second one, exchange and transfer of the security, and safekeeping, custody of the cryptographic keys, which allow an investor to access those keys. While developing those capacities, starting again 3, 4, 5 years ago, we thought that from the beginning, it was very important, since everything was new, a lot of unknown, and even worse, unknown unknowns. It was very key for us to start from the beginning with real market transactions and real clients performing issuances and placing those security tokens with clients, to make sure we're heading into the right direction, but also taking into account all constraints and typical pay points we may find in organizing financial transactions, not only focusing on the technological side of it, and it became very clear to us very quickly that there were no basically technological barriers. Technology is mature. Blockchain has more than 10 years now. technology is not an issue there. No, what was it difficult, and it's still the challenge, is to make sure that you structure your digital security the right way, making sure the prospectus, for instance, is well written, that you have the right risk factor, that you can get an appropriate rating for your security. We'll come back in a minute on that. In a nutshell, to make sure we do not create an animal which will be, let's say, something nice to visit in a zoo, but to create a security which can truly be used by issuers and investors. And hence, we started with cover bonds. As Antonio mentioned, we have issued first for our own subsidiary, Société Générale SFH, which is a large cover bond issuer in the market. We structured a digital security that was in 2019, the first one. We issued a 100 million euro covered bond, so issued by Société Générale SFH, which was a retained one, purchased by the mother company, just to prove basically that from a technological and a regulatory standpoint, basically it could work, and we will not face any unnecessary or unacceptable risks, I would say, from an investor standpoint, definitely. It proved to be okay. So we moved one step further. We organized another covered bond issuance, a 40 million one this time, in partnership with Banque de France, in the framework of those experiment program I was referring to create possibly a digital euro. And you may have read in different occasions that Christine Lagarde at the ECB already stated that the ECB is working hard on this, having, let's say, an horizon at 2025 to possibly issue such a digital euro, so pretty short term. And so it was a good way for us to test a transaction where basically we would have the both leg of a transaction, both the security leg but also the cash leg, everything being on chain to really capture the full benefit of this and having much better features than what we have. Just to give you an example, as you may know, typical settlement for security in Europe, we achieved that in 2 to 3 days. On the covered bond, the digital covered bond we issued, full issuance and settlements, it lasts 15 seconds, basically, because everything is digital, everything flows quickly on a public network. In that case, we use the Ethereum public network. I don't know if everyone is fully familiar with the blockchain technology, but basically Ethereum is one of the largest network. We do also structure securities on the Tezos network. And moving one step further, we received a mandate from the European Investment Bank to organize an issuance. This time it was an unsecured bond, which has been issued in April this year. Also in partnership with Banque de France to settle this security in a digital form through a digital euro, placing this security through a bank syndicate formed with Société Générale, Banco Santander, and Goldman Sachs, to a panel of international investors, and we'll also come back on this in a minute, I guess, with Union Investments. But to really start industrializing this new market infrastructure, which is a global one, a more efficient one, a quicker one, through blockchain technology. So maybe in a nutshell, that's the journey in which we are engaged. We have other issuances which are planned, and happy to come back on this and the benefits in terms of let's say ability to tap a broader market, efficiency gain which can be achieved, reduce cost and so on later on if you wish, and happy to take a question at a later stage.
Jean-Marc, I have a question, a very geeky question, because as we spoke in the preparatory meetings, I think we have to start trying to make general knowledge about these issuances, something that is common. I have a question, a very basic, I am sure, silly question. Why the public blockchain versus a permission blockchain? What is the, and I guess this is a very general question to the issuances that you are, why choosing the general blockchain? You are comfortable with the security and the execution there?
Yeah, thank you, Antonio. I think it's a very fair question. Maybe to start with the beginning, I mean, generally speaking, we can think about the blockchain just as a registry. It's no more than that. It's a global registry with some very key and fundamental characteristics. I'm not entering into the technicalities here, but let's take it as granted, which makes that at any point in time, every participant to this network, it's an open network like the internet, any participant to that network can access the same version of this registry, making sure that the data which is on the registry has not been altered in any way by anyone, including the one which registered data, for instance, on the blockchain. You may find basically two big families of these registries. Indeed, what we call public or open blockchains, and what we call private or closed blockchain. You may think about it a little bit like the internet on one hand for public blockchain and an intranet network on the other hand. Intranet, it's a blockchain-based technological registry, but which is closed, shared among certain participants only. Public blockchain, it's open to anyone. Anyone can connect on it and share the registry. The tricky part with public blockchain, but also the good part, is that it's open, so anyone can access it. So it's literally a global, potentially a global market infrastructure. So better interoperability, better access. The tricky part is that you need to manage some specificities due to that, confidentiality of the data, and ability to basically structure your data in a way which is compatible to public securities, I would say.
Okay, perfect. At this point, are there any questions to Jean-Marc? I think he has, given us a good idea about the project and about the intentions. Are there any questions that anyone may want to ask Jean-Marc?
Sure, Antonio. I have
Yes.
a question.
Please.
For Jean-Marc, for you and your team, what has been the most challenging? Has it been the technological aspects and keeping up with the pace of technological development, or the legal side to ensure that you have a safe environment?
Mm-hmm. Yes, well, definitely it's not technology. I'm very clear about that. I would think two main aspects. I would say number one, I would say general adoption. Even if everything has been done properly with a lot of lawyers, compliance officers, risk managers involved, when you come to notably investors, with such a new way of doing things, which I mean, upfront looks like magic. You are changing dramatically a lot of pain points we typically face as market participant. Obviously, you need to go through a number of discussions with your clients, with investors, with their legal advisor, with their compliance officer, with their risk managers, just to make sure everyone gets the same level of understanding of what you are achieving. Everyone gets the same level of comfort that regulatory-wise, it's okay. From a compliance perspective, it's okay, and so on and so forth. So I would say investor adoption is definitely one question. Things are getting better, and again, I defer probably to other panelists to comment on that point.
Okay.
But at the end of the day, we can do it. The second one, I would say, might be at the legal level and the legal documentation of the issuance, depending on the jurisdiction you choose for such an issuance. Obviously, you have different level of maturity of the legal law, which are more or less suitable for such a format.
Perfect. Any other questions for Jean-Marc? Well, I think that at this point, it may be very interesting to introduce the investor's point of view. We have Christoph on the line, Union Invest, a huge investor in the European market, a large investor in the covered bond world. Christoph, how are you looking at these transactions? You tell us about having to turn around your team in a very quick time in order to participate in these transactions. Can you tell us a little bit your side of the story in terms
sure.
of?
Antonio, many thanks for having me here and for sharing some thoughts and insights on this transaction. So for us, indeed, DLT, blockchain, and token economy has a very high chance to become a significant game changer for the industry. So you mentioned it's a transformation process. You can describe it probably as a disruptive process, and yeah, you have to ask yourself whether you want to play the role of a Nokia in this transformation, or whether you want to be the Apple and being ahead of the curve. So I'm in trading for more than 25 years now, and I think the only constant factor I've seen is the ongoing evolution and the ongoing change, and that's why for us here at Union, technology and having been fairly early on this DLT topic was key. So we did on our side here plannings for more than 2 years here in portfolio management. We've had number of people involved, and in the past there were a number of transactions going through on a bilateral basis. We were focusing on smart contracts in the context of OTC derivatives, but really waiting for the first public transaction based on blockchain technology coming to the market. And then beginning of middle of April, we got the invite from Forge and SocGen and from the EIB. They told us that there's a transaction planned, and coming with a question whether we would like to get involved. And when asking how much time do we have to coordinate, we got a really short time frame. So it was actually 3-4 days where we get told from commitment to settlement of the transaction. Jean-Marc was already mentioning when looking at DLT. We are not talking about the typical T+2, T+3 settlement, but we were pretty close to atomic settlement. So to the T+0, we really would like to achieve going forward. And I took the role as a deal captain at Union Investment, and my job was to get all the stakeholders internally, but also our custodian, which was DZ Bank in this case, externally together here. So,
okay.
So sorry, Antonio.
No. Sorry, please finish, and I have a couple of questions for you. But
yeah, and so this was from our perspective the kind of biggest challenge to get across the entire value chain, all stakeholders in such a short period of time together. So we've had legal compliance obviously involved. We've had a number of colleagues here in portfolio management having played a key role in this transaction, given the fact that we traded on behalf of a retail fund. On our side, we've had to get our retail marketers on board. Obviously, all the back office, middle office, back office units, they were key, and also the custodian. And yeah, finally we managed to get it done in this short period of time.
Well, congratulations. I think that these are giant steps, no? Just from a down outsider's point of view, Christoph, what is among the things that you mentioned systems, you mentioned compliance, you mentioned legal operations. What did you find as the most difficult steps to overcome? Was it getting the lawyers comfortable with the docs? Is it the systems people that had to hurry in order to program something in your systems? What was the main challenge in this very short period of time? And a second question is, this is a very broad question. What would it take for this type of issuances? What do these issuances need in order to start, growing and becoming a more commonplace way to execute and to formulate transactions? What do you see as the next necessary steps in this process?
Yeah, thanks for asking the questions, Antonio. I think coming back to your first question, we have a number of units here at Union Investment being involved for years on this topic. So legal did their homework in the past. You've had, on the other hand, projects in our back office, in our settlement department, to figure out which use cases do we have for DLT technology. How can we assure that the efficiencies which are possible, that we bring the horsepower, so to say, on the street. So we've had a number of various departments here at Union Investment looking from a bottom-up perspective at this topic. But in the past, there was never the use case that we could bring all these units together and to make transactions like these happening. And I think this transaction was one raising the sensitivity again, that with DLT we have a kind of door opener into a new digital age, and to create from the colleague responsible for settlement to our board members, to create this awareness, this sensitivity that some game-changing things are happening here right now, and that it's highly important to be ahead of the curve in this context. And so that's from my perspective, was the key message here internally for Union Investment, and also for our custodian, working close together and delivering the message. Some key technology is starting to be kicked off here, and it's important to be on this technology from day one onwards. What are the next steps on our side? We've seen that given the very short window of time we've had, that a number of processes in this context were still highly manual, because we don't have all the partial processes in place right now. And that's definitely the next homework we have to do, because blockchain, DLT and token economy as a whole is something which will allow us to reduce costs significantly, to have significant efficiency gains. And therefore our next task is to get all the processes here in place, that this so far one-off where we had the chance to participate, that we prepare when it becomes a common vehicle. Here in Germany, we've had most recently, for example, the law for electronic securities, which passed Parliament, and so now the work really starts, to be honest, and I think we are at kilometer 2 of a marathon, and there's still lots of work to be done.
Thank you very much, Christoph, for this very clear and very straight opinion about and your experience and Union's experience with this transaction. Just to finalize this topic, and let me come back to the regulation side, which I think both Jean-Marc and yourself mentioned, and which is an interesting topic because it is actually part of the labor, part of the work of the ECBC is to work on regulation and to help with policy, no? But before going into that topic, let me ask for a second, Carmen, in terms of the rating of the securities, what is Fitch's view and her professional view on what are the challenges in rating these new securities, and what are the risks that the rating agencies perceive, assess, and that they need to be comfortable with when they do these transactions?
Yeah, thank you, Antonio, and thank you, Luca, as well, for having us over here. And yeah, pleasure to be here with Jean-Marc and with the rest of the panelists. So from our perspective, you know, essentially when we have rated both the first covered bond and the first and the second covered bonds issued by Société through Forge, and the same thing with the EIB. So these were very interesting experiences, and as you can see over here, it's really been a lot of team effort going on over here because, you know, there are different steps to all this. So essentially, from a rating agency perspective, I think what gave us a lot of comfort was that it was not additive in terms of credit risk. Okay, so when we're looking into this type of transaction or program, we're looking at something which is more exposed to operational risk than it would be to have any additive credit risk into it. Okay, that's to begin with. Now, from the perspective of the flow of the transaction, obviously everything is a lot more efficient, agile, and you know, there are consistency gains over here. And I think going forward, I think the only drawback that there is over here is that it's not widely used yet, right? You know, we only have a very limited use of this type of I would say mechanism to issue the security. So, you know, the challenges are there is to bring it to widespread use.
Perfect. Thank you very much, Carmen. Well, I think that the benefits both from the Forge explanations, from Jean-Marc's explanations, as to Christoph's explanations, definitely we are thinking about a process that is going to be immediate, quick for the issuance of securities, that it is going to be endowed with the safety of the blockchain in terms of, you know, being a transaction that is impossible to change, and that provides investors and issuers and intermediaries with a lot of security. And it gives comfort to the rating agencies because, as Carmen said, is not credit additive in terms of risk additive in terms of additional operational or incremental risks. No, so I mean, technology is not technology for the sake of technology. Is to bring us some benefits and to improve the market. And it seems that in this case, you know, things are coming together to achieve those objectives. No, but all of you have mentioned to some extent the concept about regulation. We will talk about regulation, and we will talk about a comparison between China, the US, and Europe a little bit later when we speak about fintechs, about the rest of the world. But just looking at Europe, I think Jean-Marc mentioned the Bank of France and the initiatives that are being taken at the local level. And then I think Christoph mentioned the recent German the adoption of German law regarding digital securities. And my overall questions to Jean-Marc and to Christoph in particular is, do you think higher regulation is better, or do you think that an open competition or a more deregulated approach? Please think that the covered bond market has been particularly good at this, because we have a common product, but we have many legal regimes and we speak the same language. So we are comfortable talking about this type of diversity, no? But then sometimes when you talk about legal, you can kind of see a legal competition between the different jurisdictions to attract issuances and to attract issuers. What do you think is the right level of regulation? Maybe we can start with you, Christoph, or whoever wants to speak, or Jean-Marc.
Yeah, more than happy, Antonio, to do so. So when looking at regulation, we are currently regarding the existing regulation in depth talks with our Ministry of Finance, with central banks, with a European Commission. I'm also part of a working group on secondary markets of ESMA, and there are certain developments. That's my take, which are pointing not necessarily into the right direction right now. So we have the buy-in regime with CSDR. We have more transparency for fixed income markets, which from a regulatory perspective these days is required. The key word here is consolidated tape. And we have to assure that the market structure of fixed income markets going forward is functioning in a way it's working today, and over-regulation clearly isn't helpful because the role of buy side, role of sell side with their liquidity facilitating function needs to work, and this on a EU 27 basis, especially in the context that the FCA might take a more pragmatic approach as a part of Brexit right now for the UK. So therefore, especially when looking at digitalized regulation, we have to take into context how here in Europe UK is behaving. We have looking at Asia with China. We have an economy these days significantly benefiting from their expertise, and China is one of the clearly leading countries when it comes to DLT, when it comes to tokenization. And we have to assure that with kind of over-regulation, we don't lose in the speed race. We don't lose in the contact to the leading ones, and therefore regulation has to be seen more from a global perspective, and not only from a regional, from a EU 27 perspective. So that's
it shouldn't be a stopper. Regulation shouldn't be a stopper. Jean-Marc, I see you.
Yeah, no, I can only echo what Christoph just said. I mean, the next market infrastructure will be a global one, and there is definitely a competition and different models for those digital securities which are being proposed in between the US, Europe, and Asia, and China among others. So I think the goal is to achieve probably something which is working already at the EU level, and making sure, even if there are still minor adjustments to be made at the local regulation level, that at a more transversal level. And I mean, CSDR was named. It's definitely one of the regulation where there are still adjustments to be made. We have something which really allow those security markets to exist, which do not prevent liquidity to be accessible on that market, and further adoption. And as you pointed out also, Antonio, there is also probably still a need for, dialogue in between industry players to define, common rules, common set of operations, a common framework for this market to exist. But things are well underway, and dynamic is there.
I think a common language and is fantastic, because we can speak to each other about the similar terms, and I think that we achieved that in the covered bond world by intensive. And you know that we have very traditional, long-standing laws in each of our countries.
Mm-hmm.
I will come to Boudewijn and the ECBC. Evidently, the ECBC has been dealing with this type of issues in terms of mixing the right policy between common regulation. We finally got a covered bond directive, but at the same time, the coexistence of many legal frameworks in Europe. Boudewijn, what do you think from the regulatory point of view? How do you see as the main tasks in front of the ECBC in terms of channeling these concerns about overregulation and maybe trying to guide the market into some kind of balance between overregulation and what is your view there?
Yeah, thanks Antonio, thanks Luca for the panel. I think as also as a ECBC chairman, and also like Antonio, having been helping the ECBC over the years, and also looking at the government product, you can say, well, it is indeed a European product, coming from traditional local laws, different backgrounds, different structures, existing for many years, despite all the changes in the economy, in regulation over time. The various crises have survived it. But I think what the ECB is doing, and the role that we always try to strive for, is to accommodate and to help, and to help the product and support it in terms of transparency, reporting, benchmarking, having sort of using the best template in the various countries. And I think over time that has worked, and working together with regulators by providing them information, by communicating, by being proactive, and not pushing back, but in terms of saying, okay, we have a lot of this information, the initiative like the harmonized transparency templates, the work that everybody and a lot of people on this call have done for the government directive. And I think going forward, that's sort of the aim to strive for and do more of that, by keeping the information flowing. By doing so, regulators have the access to the information. So as a result, they don't need to put in more strict regulation, because the information is there, is publicly available, and there is transparency and there's nothing to hide. And as a result, people can access the information, can see what's happening, and automatically you have automatic supervision of the market, and it's working. And I think that's very important to keep that in the future as well, to ensure that all the information is there, that you provide more information, because in the end, over time, that's where we're going with technology, with data. More information is now available. In the past, it was in individual files on paper, and now it's all available in systems, so it can be more openly shared and used. So I think that's something where the ECBC has helped and will continue to help and support that initiative also towards regulators. Antonio.
So if I understand you well, definitely things like transparency, and to bring all the knowledge that, in this case, Jean-Marc and Christoph are providing us in terms of actual transactions, how they work, how they're supposed to work, where the regulators need to, or the custodians or the people in the chain need to address, no? So definitely the ECBC has a role to play there, no? By all means. Let me turn, perhaps, because yesterday in the preparation of the panel, our layman's representative, Fritz, made some very interesting points in the sense that we talk about blockchain, but evidently technology has a much broader play, another role to play in terms of the capital markets, because it's not only the more operational aspects that we have been talking about in these transactions, these recent transactions, but it is also another set of steps in the value-added chain of the DCM, the origination process. We are talking about investor information. We are talking about marketing and origination. We are talking about execution, book building. I don't know, Fritz, what can you tell us where you think that technology, again, from your self-proclaimed layman's point of view, would you think that that technology can step in and maybe we should deepen in investigating how this technology can changes, can affect the market?
Well, thank you, Antonio. Yeah, sure. Also, thanks to Luca. I think a joke that I made on a panel at the ECBC once about a fund brief and a blockchain together got me to this place here today. So thank you for that. Now, I would like to pick up on a couple of points. One is the one on regulation, and yes, it's fine to say, well, it's a reflex, right? So we always tend to say, no, not too much regulation, not too much regulation. There is a wonderful working product out there. It's a blockchain bond and it works brilliantly and it's all fine. And we just need regulation to step away and let us do our thing, and then it'll all be fine. Now, that view, I think we need to qualify a little bit. I don't think so. I don't think Jean-Marc or Christoph have made that point. I think, but I think we need to be a bit clearer on what to avoid here. So yes, these blockchain transactions are very promising. Whether you have them on a public or a private chain, using whatever protocol, that's fine. As a marketeer, I'm pretty agnostic as to whether an ISIN that I'm trading or that I'm selling or that I'm marketing to investors is an ISIN that refers to its representation on a blockchain or through more conventional legal terms. I think traders are pretty agnostic about that point too. You know, unless you believe in a full atomization of finance as a result of using blockchain, which I don't, but that's a philosophical question. When we look at regulation, there are real issues behind regulation that I don't think are fully solved yet. So I agree with Christoph when he says we're taking the first steps in a marathon here. So there is KYC, there is investor protection, there's data protection issues that aren't solved. There is, you know, there's anti-money laundering. There is sanctions regulations that we need to incorporate. There's legal liability as such. You know, Jean-Marc mentioned in his beginning statement issues around incorporating risk factors on the blockchain. So that maybe would be a comment for him as well as a response. How much of whatever is in the prospectus directive we can replicate on the blockchain with an issuer description and all these things. I think that's possible. I don't think it's been fully achieved yet. So again, we're in the first steps. Settlement with CBDC, that's all grand, so instantaneous settlement. But there's other issues also around this, keeping the keys secure so that and private, so that nobody knows who's taking what transaction on the blockchain. There's other issues around, you know, if you settle this with a stable coin now, you kind of have to pre-fund your transaction. That's non-standard, so that's not something that would fly. You know, these sort of things we need to still address. So there's still a lot to be done. So and regulation is a proxy to that. So regulation is in many cases there for a reason. But in terms of now going back to your initial question, there are great chances in the technology. We believe there's going to be different ecosystems emerging with you know, like an R3 using Corda in a specific sort of fenced garden, and then there's going to be a next fenced garden, and we'll need to address how to cross these boundaries at some point. I think Jean-Marc wisely used the public blockchain, which is kind of sort of preempting that that building of these fenced gardens a little bit in that way. But in terms of marketing, you know, I'm totally agnostic whether the bond is on a blockchain and whether it's settled instantaneously, or whether I have to deal with a T+2 settlement. You know, as a marketeer, as a bank, doing transaction management, being a custodian, it's a huge issue, of course, because I want operational security that the blockchain can bring. I want to manage my accounts as efficiently as possible. That's also a promise of the CBDC and the stable coin, and that's why all this is extremely important, and we're very much looking forward to participating in these developments going forward.
What do you think should stay the same? I mean, there are aspects of this which is also a relationship business to some extent, the creation and the origination and the planning and the strategy. Do you think those are going to stay the same? Well,
if you enter a transaction, you want, as an investor, you want a couple of things. Very often you want liquidity. So that requires size, and that requires broad marketability in a transaction. If you want liquidity and that requires the size of the transaction, then you would want to have execution certainty around that deal, no matter how that deal is constituted. So I believe that on the in the sort of DCM space, and I know a couple of my colleagues are watching this and they may disagree, but I think we're pretty safe. As long as liquidity is a concern, as long as that is important to investors, dealer banks as intermediaries who give execution certainty to a trade, who add market making to a deal. I mean, you can see it with cryptocurrencies. I mean, not many banks are deeply involved with that, but there's also market making going on. There's also there's the same type of mechanisms coming to the fore that we as traditional marketeers also use. So my expectation is that that's pretty much going to be unchanged. However, the opportunity of the issuer to issue directly to investors through a blockchain, that's going to change a lot. And that's going to change things a lot in the settlement and in the back office spaces. So it's going to affect banks and CSDs to a very severe extent.
Okay, let me stop here for a second just to ask if anyone has any questions for Fritz, for any of the panelists so far. I think these are very relevant topics, and I think Fritz mentioned something that is quite transformational, which is the fact about potential direct issuance eventually in the blockchain. This is a whole very interesting topic, which is probably a little bit far away in terms of in practical terms, but which evidently with this kind of atomic exchanges and quick technology, this is something that should not be ruled out, and that should maybe have some pros and cons that should probably be discussed by themselves, no? And it's a very interesting topic. Any questions out there that for any of the panelists so far?
Antonio,
yes.
I'm Roberto Colombo from Madrid. Well, for sure, blockchain is a very secure technology, no doubt. But talking about the volumes, I think is as important as the security is the performance. And well, everybody knows the problem of performing transaction in, for example, in Bitcoin and other digital in other currencies, digital currencies. What I would like to share with you, with the panel, is how do you consider that this technology, that I repeat, for sure is secure, can be used in order to have a high volume of transaction in order to allow to manage what today is manage the capital markets?
Jean-Marc, how do we scale this?
Yes, sure.
This is your question. No?
Good question as well, and we are perfectly aware of the traditional drawback of, I would say, that apply to cryptocurrencies, and that I think the key part. What is often widely discussed actually applies to cryptocurrencies, which, to be fair and honest, today do represent 80, if not 90% of the global crypto asset market. Cryptocurrencies flows on the network natively. There is no issuer standing behind. There is no regulated entity managing different aspects of such transaction. When you create a security under MiFID regulation on the blockchain, you embark with you everything which applies to a security, which means that the way operations are performed are actually slightly different from the way cryptocurrencies flow on the blockchain. You need to ensure a proper KYC for behind any address, any public address which is on the network. You need to enforce sanction embargo procedures. You need to be able to freeze the assets. You know, all those regulatory constraints we have, which makes in turn also that it offers you different ways to organize those operations and creating what we called second layer network, for instance, or other technicalities, which in turn also addresses those typical constraints in terms of performances. That's for one part of the answer. A second part, the answer also lies in the choice of the underlying blockchain technology you choose. Again, blockchains which were typically born to support cryptocurrencies have very stringent drawback on this. We have other blockchain networks. I'm thinking to the Tezos network, for instance, on which we did issued a structured product for an insurance company earlier this year. For instance, is more natively designed to support security transaction without those performance limitation we may find, for instance, in the Bitcoin network.
Thank you. Thank you very much, Jean-Marc. I think it was very illustrative, and it is the kind of question that we to get answered and to try to go deeper, no, from that point of view. So thank you very much. Any other questions on this topic? Okay.
Hi.
Yes, go ahead, please.
My name's Richard Metcalf with Global Capital. I'm very much a layman of blockchain, so maybe this is. But would you be able to help me to understand a little bit? You talked a lot about transparency, and the benefits of using a public blockchain, but at the same time confidentiality and secure keys and things like that. It may be a very basic question, but how are those things resolved? I'm assuming that I, for instance, as a journalist, am not going to be able to see it instantly at any time who all the holders are of a particular digital security, or am I?
Yeah, oh, it's also a very good question. Thank you. I guess the interesting part with the blockchain technology is that it allows you both to create and to use a global network, and in that sense, that's why I'm referring to a global network which is accessible to anyone. Anyone, is it an investor in New York, in Europe, in Australia, is able to access the same network and, let's say, to place a trade on a digital security, let's say to purchase and settle this security on the network. So in that sense, it's global and open and interoperable to everyone. No, at the same time, obviously, you need to create the appropriate mechanism which makes sure that some confidential information which are tied to you, for instance, your settlement instruction, your IBAN account, or just information which may identify you on a clear way basically do not appear on the blockchain. And that's where we turn on the other side of the answer. Maybe all the trick is precisely to design the security on the blockchain to achieve that, and hence to leave informations or some part of the process which organizes this transfer outside of the process. And again, typically in the case of regulated digital assets, so namely security, in many jurisdictions, and it's definitely the case in France and in other countries, the regulator basically is asking that someone, so a company, to make things clear, a company which falls under, let's say, general regulations which applies to financial institutions, is responsible for both managing the security and deploying the security on the blockchain, is also responsible, for instance, to ensure a proper continuity plan in case the blockchain network falls, and is also responsible to ensure that confidential data and GDPR data, for instance, do not appear on the blockchain. So in practical terms, what does it mean? It means that any investor on a blockchain, on a public blockchain, is identified by what we call the public key. It's like an account number, if you want. It's a long string of letters and numbers which identifies you in a unique way on the blockchain. The point is that only what we call the registrar, this registered entity, which is defined by the law, basically knows in his own database, private database, that behind this public address, there is investor ABC with a proper KYC in place behind this address. And we have to maintain this parallel registry to make sure that regulatory-wise, there's someone responsible, us in our case, in the case of the EIB transaction, who knows who is on the blockchain and who is able to enforce all the regulation which do apply to securities. And that's the key difference in between security tokens on the blockchain and cryptocurrencies. Cryptocurrencies such as Bitcoin, basically nobody knows who is behind the address, and you can transfer your Bitcoin in between two addresses without anyone being aware of it. Here we are in the financial space. It's regulated and it's a good thing for everyone. And it means that someone has to know basically who is there. I hope it answers the question.
Can I comment on this very quickly, Richard? Because yeah, I've had somebody explain that to me as well, and I think the issue of privacy arises, arises from combining different data sources. So union or other public fund managers, they have to show their investments, right? So that's publicly available information. Has nothing to do with the blockchain. But if you know that they've invested a lot in a specific security, and that security is on a blockchain, and then you access the blockchain, and then you find out who owns most of that on the blockchain, then you can make the connection between union and the public key that represents a specific entity acting on the blockchain. And if it's a public blockchain, everybody can, I can't, right? Let's be clear about this. I have no idea how to, but interested parties, theoretically or practically, can access that, and they can put these pieces of information together. I'm sure, Jean-Marc, that you have clever ways to deal with that issue, but that's something that that combination of data is something that we at least we don't worry about it that much, but something that we look at.
Jean-Marc, please correct me if I'm wrong, but when going to the blockchain, actually there's not the dedicated name of the investor shown, but it's what is it? It's a 30-40 digit number alpha code which is there. So when having a variety of investors, literally it won't be possible to draw any conclusions which specific name, which specific asset manager is behind that. That's information which is available for the registrar, but not for the public.
Yes, obviously we make sure that no one is able reading the public blockchain information is able to re-engineer the investment portfolio of a given investor. That's clear. I think the point is that with one and without being too technical, it's sure that no clear information is written on the blockchain, no name or anything which is able to, directly identify the investors, but even through this public key mechanism, this long string of number, basically you can generate almost an infinite number of public key for a given investor. So for each position and even for each transaction on a position, basically you regenerate a key, which at the end of the day make that retro engineering completely impossible. So you achieve at the same time the unicity of the holding of the security on the blockchain. The security token embed in itself its own registry, and hence you remove the custody of the security, from an entity outside of the blockchain. The security owns its own registry, but in a way which outside of the registrar, this entity which is responsible for ensuring the KYC, basically there is no way to reconstruct the portfolio. But if people want to have more information on this operating model, we have published in an open source manner, all explanations of all this works on the blockchain. And when we were referring to a common language, I think that was really the objective of what we call the CAST framework. CAST stands for Compliant Architecture for Security Token. It's an open source framework for operating security token operations. We are precisely designing together with the banks which participated to that trade, with the EIB, with Banque de France, to promote this market infrastructure. So anyone willing to dig further on this is welcome to connect. There's a dedicated website, castframework.com, where you will be able to find all appropriate information there.
Jean-Marc, thank you very much for this information. I think this is part of the things in the effort to spread the information for people to understand how things work. And I am sure that this website is going to be extremely useful in that process. No? Any other question to the panelists in this regard? Okay, we have some time left in our panel. Of course, these are busy mornings and people are busy, but it's Friday morning and people are busy closing the week. We have a number of other topics, and evidently topics which open the door to other topics in this endless digitalization process. We have in our menu fintechs. They are, as well as some of the panelists mentioned, some of the most heard about topics and discussed topics, and frankly, they are an important developer and an important catalyst in the evolution of the internet in Europe. I wanted to turn to perhaps Carmen, who has a strong background and whose responsibilities in Fitch also involve the world of fintech to some extent. If she could give us a kind of a very global view on the fintech space at this point, and globally, what is happening?
Yeah. I think it's a very fascinating world and a very I would say very different world in different parts of the globe, right? So if we look at the big players within the fintech space, we're essentially looking at China, the US, the UK, And then interestingly enough, you have pockets as well in other jurisdictions, such as Brazil, for example. So essentially the development of these, like we all say, is technology, right? So we know that technology is driving this big change. And when we look back at post-financial crisis in the US, a lot of these players began to emerge, and in most cases, they emerged firstly from the, I would say, the consumer lending part of it, or the payment systems part of it. So, you know, when we're looking at that, it's very interesting to see that, you know, the evolution has been based on that, in that area, right? So when we're looking at peer-to-peer lending, or we're looking at the marketplace lending, so all this have been very important developments. I think the interesting thing over here, and thing which I flagged yesterday in our prep call, was that, you know, a lot of these jurisdictions, they all began not being regulated. So moving back to regulation, a lot of these players were unregulated. And what we're beginning to see right now is a move towards regulation, where we're seeing some of these big fintech players, such as, for example, if we're looking at Lending Club in the US, you know, this peer-to-peer player is you know, actually acquired a bank, you know. So we're seeing this convergence of the you know, the pure non-regulated world becoming more regulated. But then we also see the flip side, where you see banks moving into the fintech space. So there's greater convergence over there. And I think, you know, if we stop a bit on regulation, and Antonia, you know, we discussed that earlier with the blockchain. Definitely regulation is a big must. I would say, because, you know, in the end, the financial industry is a confidence industry. So, you know, to the extent that these players are transparent and able to build that confidence, then, you know, we're in good shape, right? And the other thing that's very important is data. Okay, so oftentimes we've actually, you know, rated some asset-backed securities deals in the US. And, you know, when you have limited data on a certain lender, you know, lack of historical data, industry data, it's very, very difficult to actually come to a conclusion on that. And so you usually have to be a bit more conservative in that from the ratings angle. Okay. Having said that, you know, we're seeing, when you look at players such as, for example, PayPal, you know, which is a well-known name in the market, we're looking at an A- rating, for example. So it's just an indication that, you know, I think the world is moving forward.
No, I mean, these are very strong ratings for companies that are going to be quite important going forward. No, from the point of view of data, of course, the part of the work of many of the algorithms and formulas that are leading the world in the analysis world evidently depend on lots of data analysis. And as you said, maybe the data is a little bit dispersed, and that may be the problem, no? When it comes to using some of these analytical tools. I guess that there is a whole new aspect of the mortgage world and the mortgage analysis and marketing and commercialization, which is data analysis in terms of market trends, in terms of commercialization of products, which depends a lot on data. And the more data are shared and the more data that we all have, the better tools that we will have in order to do this, no? So in terms of the European model, Carmen, you think that it's better to have consolidation and to consolidate models, or this kind of private involvement via the fintech world is going to be more effective at this point?
I think we're still at very, very early stages at the moment, and definitely to the extent that you get economies of scale. I mean, in the end, a lot of these fintech companies are very, very specialized, so you might have synergies by merging one type of fintech with another type of fintech. I mean, we're talking about a very broad range and a very broad, I would say, fintech is tech, put it that way. So if we're looking into a consumer lender and a mortgage lender, which they're both using e-platforms, over there you can easily see, well, if there's synergies over there, then there could be mergers in that space, and that could be a possibility, right? So I still think that we're still at very, very early stages, though. What we do see again is that the regulation behind it, and then if we're looking at structured finance and covered bonds, obviously, like I was saying earlier, the data aspect's important, because in the end, when I compare how we would approach, let's say, the blockchain issuance and compare that with a securitized transaction or a covered bond, we have credit risk when we're looking at covered bonds. So obviously, we need to look more in depth into that.
Okay, I think that this is a very interesting topic, and probably we have discussed this with Luca and the team in terms of going forward in the analysis of how digitalization is going to affect the mortgage markets and the pools in the covered bond world. Probably data analysis and data science, Carmen, is something that may require a very interesting deeper look. Because from the point of view of what is going forward and what is happening in the market in terms of the competitiveness of platforms that are marketing, number one, mortgages, and number two, from the analysis world, I am sure that increasingly rating agencies and analysts are trying to get new tools in order to predict and to evaluate portfolios. So that is a whole new topic. Maybe the evaluation topic, no, Luca, is something that is very prone to data analysis from the point of view of geographic location, demography, GDP, etc., etc. So definitely the fintechs are going to play an important role, and data analysis is probably a subject which is not the immediate subject of this panel today, but which may be the source of more interesting topics for ECBC members, no? Luca, I think that may be the case, no?
Absolutely, Antonio. And the other thing I just wanted to share quickly is I think, with this, you're also able to collect better data. I mean, I would say store that data and mine that data. So, definitely exciting new world in front of us.
Okay. Any questions for Carmen at this point on this global view on the fintech space? Okay. Finally, Boudewijn, can you share with us your view on the fintech market? You are now in Auxmoney, which is a digital company, and probably your views coming from the covered bond world are something interesting to share. How do you regard the digital space right now in terms of what is happening, and how you see the market developing in the next couple of years?
Yeah, no, I think as Carmen mentioned, the data and the fintechs, in the end, it also is like often they start with a niche and a certain product, a certain activity that maybe banks, if you're looking purely at the financial space, that banks do, but where you say, well, this can be done more efficiently by using technology. And it could be, if you look at data, it could be like if you apply for a mortgage or apply for a consumer loan, in the past or still sometimes now, you need to provide all the information yourself. And writing it down or giving it to somebody or putting it in the system. But it could also be that you just give your bank statement, and there's a system that reads your bank statement and reads all the information, salary, expenses, your energy, so everything you do, directly into a system, and as a result, you don't need to provide that. So it could be ease of usage for the borrower, and also for the fintech or the bank. You directly have the information. You can use it, and you can calculate how much somebody can borrow. And that's also something we do at Auxmoney, where we say, okay, we use a system, we use credit scoring, and it's quicker. You use new systems. That's often the advantage of a fintech, because you start up, you start with the most latest state-of-the-art system, instead of maybe banks that have existing systems in different countries, different assets that are combined. One is using the bank statement, another one is for the loans, another one maybe for deposits, and to link it all together, that's not always easy. So in that sense, when you start up, you always have a bit of an advantage, because you can pick your system, you start with new information, and everything is available. And then, but the challenge afterwards is indeed to also scale it up in terms of volumes, because in the end, you also want to be competitive in terms of cost and fees. And especially, I think that's a challenge for Europe, maybe versus US and China, in terms of the home markets. If you start in the US, you directly have a home market which is much bigger than if you start in Germany or in the Netherlands, because it's just much smaller. So in order to scale up, it's more difficult. So you need to be able to then do the same in other countries to make it even more efficient. Otherwise, you may have the risk that the US company says, "Oh, I'm now so big and I have so much money that I can almost copy it in other countries and push out my competition." A bit like what you can maybe say Amazon is doing in certain countries, or the delivery companies, where you may have initially a local company, but there's an entrant coming in, which is so big and so can push, do it so efficient because they have more funds. So that's a challenge. But I think where the contribution it can be like being more efficient, quicker, as a result, making it easier for a client, the whole process, and hence more efficient, and also combining information. After the challenge is where, at what point, where does the information stay, especially the personal information. Of course, that needs to be clear for clients and for everybody that's done in a secure way, and hence that the systems can cover that. But that's all done.
So I take away from your points, number one, that that information is going to make things easier and quicker, and to sharing the data and to using the data, as long as the privacy is respected, should be a tool that will allow the market and the companies to be more competitive. And number two, that we should scale up, as we were saying with Jean-Marc and with Christoph. We need to have a technology that is going to apply to large volumes, good transactions, so that the technology is amortized. The technology expenditure is amortized over large transactions. No? So definitely those are two takeaways. Well, thank you very much, Boudewijn. Thank you very much, the rest of the panel. I'd like to wrap up here at this point. Of course, any of us are available to you for further questions, and we would like to thank you very much. Christoph had to step away. I already thanked him in the chat for making the time, but I'd like to thank definitely Jean-Marc, Carmen, Fritz, and Boudewijn for their time and for their contribution to the panel. It has been a very interesting topic, and which marks some interesting tasks and takeaways for the ECBC to work on. Information about this technology and how it's influencing the market, to the creation of and the promotion of a common language, so that everyone in the market talks about the same and can dialogue and can discuss things. And probably we need to bring in another group of people from the legal side and maybe other sides, which can also contribute with their views on how to go forward. No, with this, I'd like to wrap up. Luca, maybe I leave you the floor for the closing words. But from my side, I thank you very much, all the panelists, all the attendees to the meeting, for your time in a Friday morning. And on my side, I wish you a nice weekend.
Thank you, Antonio.
Thank you, everyone.
Thank you. I want just to say that, I mean, we are in front of a big difference between two schools of thought. Some market participants believe that we are in front of a simple evolution of the market. Some others that we are in front of a very revolutionary phase. I would like to ask the community of the ECBC to send us input, comment on this event, because we want to make more out of this. We want to have a systemic approach. We want to cover your competence. We have a lot of experts now today in this call. I think in this call, we have a nice selection of pioneers trying to have ideas, try to think about solutions. So please send an email to me or to Antonio where we can think on how to move forward on this topic. We are a community and we want to have your input. I would like to invite all of you also to participate next week, next Friday on the Bauhaus event. Is another idea where we try to put together digital solutions together with green solutions. So we are a platform. We need your input. We need your ideas. And I would like to thank the speakers of today, I mean, for this very high level discussion. And allow me to conclude by wishing you, of course, bon appetit for the lunch, for the early birds in the north. In the south, I mean, you need still an hour before approaching the table. I would like also to conclude by using our corporate video. Now we will show you this video more and more in the coming days. But I mean, we would like really to thank you and stress once again that we need to work together. We need to have a common language, as Antonio said. We need to have a common understanding. That's the only way to tackle our core business, which is policy making messages. We need to build a new policy roadmap, strategic for the ECBC, strategic for the funding side, and strategic for the retail side of our industry. Thank you all for your ideas and for your participation today. Daniel, can I ask you to just phase out this meeting with our fantastic video? And of course, a big thank you to my team for the fantastic work done behind the scenes.
Thank you. Thank you, Luca.
Thank you all.
Thank you very much.
At this unprecedented time of change, we need to transform challenges into opportunities, looking the next generation in the eyes. Our homes, the place where we raise our children, are at the heart of our lives and interests. Exactly like the word oikos, home, at the heart of the ancient Greek word oikonomia. A sustainable economy has to be built around the concept of home, the cornerstone of citizens' interest, centered on an ESG ecosystem that promotes green values and raises environmental awareness. We need to lay the foundations for a win-win market paradigm which secures both economic growth and financial stability. We need to lay the foundations for a green renaissance rooted in a new perspective of sustainability, digitalization, and social inclusion. The banking sector will play a crucial role in the post-crisis recovery. It will help us to build back better, close inequality gaps, and transform dreams into reality. Banks are more than just financial institutions. Banks help us to get big ideas off the ground, to put a roof over our heads, to care for our parents, to prepare for our children's future, and to support our business ventures. We transform hopes into concrete actions. Together, we can make the difference. Let's build a more sustainable world.
Thank you all again. And I wish you a very nice afternoon and a fantastic weekend. Thank you all.
Thank you, Luca. Bye.
Thank you. Bye-bye.
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 Thank you.
Bye.
Thank you.